And welcome, it's Mary Ellen McGonagle with your Friday afternoon weekly Edge show. Today we're going to take a look at those markets and see how we close for the week. We are at new highs, also beyond. We want to see some of these newer areas that are reversing their downtrends, and they're very key areas of growth. You'll want to be aware of that. And some of the headline news that drove price action last week, all about inflation and interest rates. We'll get into that. And last up, viewer question of the week. And it's all about two different price actions that are taking place following earnings reports and how to trade them. This is ahead of next week's key NVDA earnings report. So first up on those news items, producer price index did come in a little higher than expected, but it was that core CPI data that is really more closely watched, certainly by the Federal Reserve, and it came in lower than expected. So that was certainly good news. We did see interest rates drop, and again, those select areas of growth begin to move into nice uptrends. Retail sales were flat last week, and consumer discretionary stocks continue to reflect that. The group was flat for the week. Also, home builder confidence fell while housing starts rose. So we did get mixed reports relative to the home building market. We'll take a look at that group. And then also weekly jobless claims did slow down. So a lot of mixed data points in the end. However, that CPI data was the most critical. Next week, you're going to want to be on the lookout for the FOMC meeting notes that are going to be released. So from here, let's go ahead and take a look. Where did we close for the week? Here we are with the daily price chart of the S&P 500. As noted, we did hit a new high in price on Wednesday, and we're remaining up there. This is very good news because as far as any possible upside resistance, it is now behind us. From here, you can see that RSI is in positive territory heading north, as is this moving average convergence divergence. So the markets are in good standing. Now, beyond that, I'm going to take a look here at these 11 underlying sectors in the S&P 500. I've added an RSI indicator and sorted them in descending order. Up here at the forefront, utilities continuing to outperform, up about 1.4% in line with the markets last week. We are in an overbought position, however, given its sharp advance over the last 5 weeks. However, of note is the fact that these utilities are seeing their growth prospects upgraded, a lot of it due to their ability to provide electricity for data centers and other AI-related capabilities. Also up here at the forefront, take a look. Healthcare has moved into an uptrend with a close above that 50-day RSI and that MACD, both in positive territory. Beyond in our next segment, I'll go ahead and share with you where that downtrend reversal, the reason for that move, what areas are certainly advancing higher. Also, you want to be aware of the fact that technology, which did very slightly reverse its downtrend last week, has advanced. It saw the biggest move on Wednesday. This is that move into growth stocks I talked about. We'll take a look at that yield on the 10-year up next. But net, we are seeing technology at a new high, and this is generally good news. It's the largest component of the broader markets, and we want to see strength there. Also, real estate stocks on the move higher. This is an area that does fare well when interest rates are falling. You'll want to be aware of that because the momentum just turned positive here. And also want to be aware of the weaker areas. We talked about consumer discretionary. This is XLY, flat for the week overall. And there are pockets of strength, but overall the sector is exhibiting weakness. Now, from here, we want to dig in beyond those sectors and take a look at industry groups within them. Again, all with an eye towards sharing with you where the relative strength versus weakness is, because the group and sector movement is going to have a lot of impact on the stock that you may own or may be looking at. So up here at the forefront, I talked about healthcare. Here's IBB, the biotechnology ETF, up 2.5%. 0.5%. And you can see an advance above that 50-day simple moving average, RSI and MACD in positive territory. Another area in healthcare that's beginning to turn positive, this is the medical devices ETF, IHI. We're seeing nice earnings from select companies, not quite in positive territory with that MACD, but that RSI up here, those are certainly two of the more growth areas of healthcare that are helping that sector reverse its downtrend. Technology, let's take a look. This is software group IGV, and this is that move on Wednesday that I spoke of, up above that 50-day MACD and RSI up here in positive territory. We have some key software companies that are due to release their earnings next week, and that most certainly will impact, among them, Palo Alto and Intuit. Let's take a look at semiconductors. This is another area that had just inched into positive territory. Again, Wednesday's advance in tech amid lower interest rates helped this group as well. There were other metrics that were helping semiconductors fare better, but at the end, we do have a positive MACD and RSI. Nice to see that move back into semiconductors now in an uptrend. From here, we're going to take a look at that yield on the 10-year. You can see that we had been in a bit of a declining phase. Here's that Wednesday gap down. However, over the last 2 days, Thursday and Friday, we did see interest rates inch higher. Not what we want to see. Most certainly, we don't want to get back to that 4.5 level. We closed the week at 4.4. So going to be keeping a close eye on that because rising interest rates are not good for growth stocks. From here, I mentioned I'm going to share with you price action that can take place after the release of strong earnings with an eye toward helping set you up for success depending on where NVDA comes out with their numbers. So first up, we're going to take a look at a gap up in price on earnings. This is a company that reported a couple of weeks ago, and you'll see that it has since experienced quite positive price action. This is Cirrus Logic, CRUS. What I'm highlighting here is the fact that the stock experienced this gap up in response to strong earnings. Now, from here, I'm going to mark up some of the characteristics that would tell you that the stock had further upside in addition to that sharp advance after earnings. First up is the fact that the gap up took place on very heavy volume. That's accumulation characteristics. We also did see this MACD experience a move into positive territory coupled with this RSI also moving back into positive territory upon that gap up. So that is bullish characteristics. We also, what I want to share with you is you'll want to add a 5-day simple moving average once stocks really blast off, because this is that blue line. It will oftentimes act as support. Pullbacks to that 5-day can then become buy points for the stock. Now, there is other price action taking place among stocks after reporting strong earnings, not truly applicable to NVIDIA, but that is names that are reversing their downtrend or in the beginning throes. Here we are with Valero Energy, VLO, and take a look. The stock closed the week back above that key 50-day simple moving average. We now have a positive RSI and a bullish MACD crossover. Now, for me, I would like to see the stock advance further above that 50-day to provide more conviction, get that MACD moving higher, as well as an example of a company or a name that has experienced that reversal. This is Biotech, TECH. Here we are with a gap up into a downtrend reversal with that 5-day moving average acting as support as the stock continues to advance. From here, let's go ahead and take a look at NVIDIA as we move into the release of their earnings on Wednesday. The stock is sitting up here close to new highs. We simply need only go back to their earnings release at the end of February, and you'll see that going into that report, there was a lot of certainly fear that the company would not produce because they were sitting up there at that new high, and we did see this pullback. However, on that pullback, the stock found support at that 21-day simple moving average, and we all remember the strong earnings and the continued advance that the stock experienced. So from here, we're back here sitting up here at new highs. However, we are very close to these key areas of support, this 10, 50, and 21-day simple moving average. So we will want to certainly keep a close eye on whether the stock continues to find support if we do see disappointing results. And then, of course, from there, using that gap up, should we experience strong numbers using the examples I shared. That's it for this week. Have a great weekend. I'll see you here next Friday.